Well, good morning, everyone. It's November 5th, and it starts all over again. Happy Monday. So, big report for the week is going to be employment data, jobless claims. That's going to come out on Thursday, and I'm expecting the numbers to be right around 205 to 220,000. Aside from that, the only major number to look at is international trade and JOLTS. But honestly, the big report is going to be on Thursday. Now, let's jump into the stock market. I want you guys to see something. This is Apple. Notice Apple's making all-time highs. Apple is responsible for about 20 to 25% of the market cap in the S&P 500, which is why you're seeing this index rally so hard. Let me show you. A lot of it has to do with Apple. Notice it's overbought right now. So a lot of what you're seeing, this price action right here, it's caused literally by a handful of stocks like Apple, Amazon, Intel, Nvidia. If you look at the smaller stocks, if you look at stocks that have a market cap of about $2 billion, which is the average U.S. company, we're nowhere near all-time highs. We're at the upper part of the channel, and we're grossly overbought. So this whole thing about making all-time highs, I don't know about that. This is when we made all-time highs in the overall stock market a year ago. Over a year ago. And since then, we've been just trading sideways, going up, down, and guess where we're at right now? At the upper part of that channel. And again, the S&P, it's just a handful of stocks. Now, the tech sector has been responsible for this rally. If you look at the tech sector, you'll see that it's grossly overbought, just like it was right here at this level, and just like it was at this level right before it comes down. So I'm not really that bullish on the overall stock market. I am actually very defensive. Now, let me show you something eye-opening. Put the call ratio is at 74. What happens every time we go down to 74? We pop back up the other way. When it's at 75, anytime it's below 80, it's telling us that the markets are too complacent, too bullish. Anytime it's above 135, or 125, it's telling us that the bears are scaring this market. Right now, the market is too complacent. This is the lowest level we've seen. Let me go back to 2 years. Just to show you guys what I'm talking about, so you could see the same thing that I'm seeing. Yeah, it doesn't really show well on short term, but if you look at it over time, here we go. This is as of a year ago. Notice we're right near the low. Every time we come back to about 75, 74, it's like a rubber band, snaps back. Also, volatility, which is mean reverting. This is volatility of the S&P over the last year. Look at the lows. We're right near one-year lows. And typically when volatility comes down to about 12, at least for over the last year since we've seen China, we move back up to 20. So the CBOE VIX is telling us that the markets are ready to revert back in terms of volatility. The put-to-call ratio is telling us that this market is stretched out to the tilt. Apple, which is causing most of this upside, is grossly overbought right now. And the overall stock market, as you could see by the Russell 2000, not by the S&P 500, which has only 500 of the largest stocks. This is a cross-representation of stocks that have 2 billion market cap, 2,000 stocks. Notice here, no all-time highs. So what it's telling me is overbought again. What it's telling me is the market is going to come down. I expected the market to come up, make new highs on the S&P, trigger the buys, get all the suckers in, all the retail traders to buy, to become bullish again, and start coming back down. There's really no catalyst. Earnings are better than expected, but expectations are so low. So again, I'm not expecting a major bear market. I'm just expecting this congestion, this cycle to continue, which, by the way, is really good for swing trading. Now, in terms of news, we have reports coming today, earnings coming today on a big stock, which is called Uber. Let's look at Uber. Let's see how it's doing. Uber is trading right at the 50-day moving average. It's not doing that great. As a matter of fact, since the company has been going public, since the company went public, it has come down. Am I expecting Uber to make highs? Not really. What I would do if I were you is wait for Uber. If you're an investor, this may be a good time to buy. But if you're a swing trader, please don't buy Uber till it's above the $45, $47 level. Now, two more pieces of information for you. You're going to see some downside in McDonald's. Their CEO resigned or was forced out due to some irregularities, personal irregularities, and UAA, Under Armour, had some bad things happen to the stock as well, and it's going to cause us to go back down to support. Those are the major stocks for today to look at. Under Armour, McDonald's, and Uber with earnings. And again, folks, I know you're thinking, Roger's crazy, the market's making you high, we're going to go higher, we're past this China thing. No, nothing's been resolved. We're nowhere near resolving this than we were a year ago. I'm not kidding you. It looks like we're making progress, but there's really nothing happening. And the closer we get to the elections, the more China will go from being passive-aggressive to being aggressive, because Trump will have a lot more to lose when negotiation comes closer to the elections and it starts impacting the stock market. He's going to want to negotiate. So it's much better if we resolve this now than later. Hope it helps. Talk to you guys soon.